you? And thank you so much for joining us around our campfire. Now more than ever, we need to stay connected as a community and to talk. And it's for this very reason that we are collaborating, that OBE word, with Accenture and Mission Plus, developing something exciting that will keep us all connected. OBE is all about making connections with purpose. We've just completed our rapid sprint prototypes process, and now, as always, we would love your feedback. Now, I'd love to hear what types of connections that you would like to make, and of course, I'd much prefer to be doing this over our trademark pizza and a glass of wine, but in our new online world, we've two very quick polls for you, which you can see at the side of your screen. One is about the process, and the other is about the types of connections you would like to make. Now, I found this innovation and discipline, the whole process has been fabulous and invaluable for us at OBE. So a huge shout out to Nick and Ned from Mission Plus even, and their team. And now we'd love your feedback. So a huge shout out to all the team from Mission Plus, thank you. And if you go to the polls tab, please just take a moment to fill that in. It is super important to us, so please give it a go. As we're looking at your screen, you can also see that we're now welcoming submissions for our Open Finance Apathon. Now, given today's topic, can I ask you all to please have a look at the Open Finance for Good challenge statement? We really want to see as many submissions as possible, and as you're about to hear later on, that this problem is only going to grow. As always, and you'll know by now, we've got the very talented Karina graphically recording the insights and the stats from our amazing speakers. At the bottom of your screen, you can actually see a QR code. So please lift up your phones, okay? Make a charity donation using open banking and an automated gift aid API. How cool a user case is that? Come on, that is a cool use case. Talking about open banking for good and more use cases, each year we are really proud to support Nesta and the OBIE challenges. And this year is particularly special as we've got Farhan from Anthemis joining us on the panel today. Now he wears two hats, one as a Nesta challenge judge and one from a venture firm where they invest into this space. So I'm super keen that he shares more about his portfolio and their companies and particularly their use cases. So we would like to say a huge OBE congratulations to all the Nesta and the OBIE challenge winners. Moneybox, well done. A special shout out to you guys as you use the Railsbank Banking as a Service platform. Railsbank support OBE and help make all of this happen. And Mojo Mortgages. Now, I saw the chief exec pitch for this competition. He was full of flu. Your heart just went out to him. This was pre-COVID. And all he could say was that open banking product took the stress out of getting a mortgage, less stress, better sex life. So his product improved his sex life. And it made us all burst into fits of giggles. I loved his style and I really do hope he's keeping well now. Congratulations all. It's an amazing accolade to win. And of course, every startup will find the cash that you've just been awarded invaluable too. We will be following each of your success stories and promoting them wherever we can using our channels and our platform to do just that. It will be our pleasure to give you shout outs on, even if I can say it, on LinkedIn and on Twitter. Now, I can think of no more relevant topic for us all to talk about right now than financial inclusion, smarter ways to lend. In the UK, we're in lockdown and the government furlough system, our support scheme, is about to come to an end at the end of the month. In this country, we've already 13 million in the underserved category that are using credit and lending. You'll hear Tim from Salad Money, who is on our panel, referring to this group as indebted. So 13 million already using credit and lending. incredible and sobering, which is a good segue for me to introduce you to Joy Mcknight, Managing Editor of The Banker, one of the longest established publications that we have. Now, I first saw Joy on the telly when she was hosting her Tech Talks program, so I'm absolutely thrilled to bits to hand over to Joy, who will ask our amazing panel to introduce themselves. Now, some of them you know, some of them are the best kept secrets, and it's our absolute pleasure to be able to share them with you. Now, as always, you can see Slido at the side of your screen. Please don't be shy. Ask our expert panels questions as we're going through. So Joy, over to you, and thank you.
Excellent. Well, thank you so much, Helen. As Helen said, I'm managing editor of The Banker, which is part of the Financial Times group. And I host this a whole series of videos called Tech Talks, which covers FinTechs. So the series has been going now for about 5 years. So there's about 200 FinTech interviews on our site. I think financial inclusion obviously is a really strong trend in the FinTech community. And a lot of people I talk to, they really, from the entrepreneurial sort of spirit, they really want to solve the issue, driven by the desire to make the world a better place. And with the advent of open banking across the globe, this might be an opportunity to drive forward the financial inclusion agenda, especially in access to affordable loans and alternatives to the real toxic payday loans. So I'm really happy to be here and to host this panel. I'd like to get my esteemed panelists to introduce themselves. Can I start first with Farhan?
Yeah, hi everyone. I'm Farhan Lalji. I'm principal at Anthemis Group. And as Helen kind of mentioned, I'm wearing two hats. So I've got the investment side with Anthemis, where we've been investing in companies that both enable open banking, like TrueLayer, but also kind of companies that are at the edge of producing both consumer and business solutions leveraging open banking. Anthemis is one of the world's leading fintech-focused VCs, and we invest in early-stage companies that are going to disrupt and innovate in financial services. Alongside that hat, I'm also one of the judges for the Open Up Challenge that was presented by Nesta and the Open Banking Implementation entity. And as kind of Helen's already kind of announced the great winners, happy to kind of talk more about the companies that we selected and all the companies that participated, but also how we're trying to kind of drive open banking take up, both in the consumer side and on the business side. And thanks for having me.
Excellent. Thank you so much, Farhan. And Tim, will you introduce yourself?
Unmuted. There you go. Unmuted. First mistake. So my name's Tim Rooney. I'm the CEO of Salad Money. No stranger to open banking and these events, but we are lending affordably to NHS employees across the UK using open banking. Particularly keen to ensure the adoption of open banking and its correct use within the affordable lending marketplace. So we've been going since 2018 and it's been one hell of a journey for us. So very keen to be here and to contribute.
Excellent. And Diane?
Hi, I'm Diane. I'm the CEO of MoneyLine. It's really great to be here today and part of the conversation, so thanks for having me. As a not-for-profit lender, we are serving low-income households. We've been around for almost 20 years now, and we serve those households with more affordable financial products. Our organisation started using open banking data for underwriting in 2019 through our telephone lending. We embarked on development work on how we could use this and other data to formulate a kind of state versus trait views of our core customer segments. And that was really to improve our underwriting processes and extend almost that picture we had of our customers' financial lives. We accelerated that focus on the work during the COVID crisis. And we wanted to be able to see pre, during and post lockdown a kind of view of our customers' circumstances then to continue to lend responsibly to them in this period. we've discovered some challenges for our specific use case with the current structures of data, and we're exploring ways that we can tackle this, and hopefully there'll be the opportunity to talk a bit more about that today. So thank you.
Excellent. And Gareth?
Good afternoon, everyone. My name is Gareth McNab. I'm Social Innovation Lead at Nationwide Building Society. That meant that over the course of 2019, I was co-leading the Open Banking for Good program of work, where we were looking to work with FinTechs and charities to use open banking to power products and services to serve the financially squeezed. Perhaps controversially for this session, we didn't want to advance anyone through who was seeking to lend money, because there's more to financial inclusion than simply lending more money to more people. There's an awful lot of work to do to make sure that this technology can serve people's wider financial needs, like getting on top of saving, ensuring they're properly insured, and that they can generally just keep on top of the money. I know an awful lot of people in the audience will already be persuaded by that, and so I don't know that I'm going to rattle too many cages. But I think the main thing that I want to explore this afternoon would be how can we make sure that further innovation is properly informed by the end users as well as the funders.
Excellent. And Sheraz?
Hi, everyone. Thank you for the invitation today. I'm Sheraz. I am CEO of CreditLadder. CreditLadder essentially helps tenants improve their credit position by paying their rent on time. So if you're a homeowner, your mortgage payment is taken into account when lending decisions are made. Historically, if you're a tenant, your biggest expense typically is your rent, unless you have an extremely extravagant lifestyle. But that rent payment was never factored into the decision-making process. So we've been using open banking almost since day one. Over that time frame, we've seen adoption grow on a monthly basis, and our position is relatively straightforward. We want to make rent count, and we want tenants to be rewarded for paying their rent on time, just like homeowners are when they pay their mortgage on time.
Okay, great. Thanks for everyone for introducing themselves. And now let's get into the meat of things. I was going to sort of start with a state of play kind of question. You know, how is open banking really making an impact or changing the area of lending? And Diane, I was going to ask you to respond first.
Okay, thanks, Joy. I think if I think about almost the non-standard lending market, because that's kind of what I know the best, it had already really begun to change before the pandemic. There'd been the exit of several smaller and some larger lenders, some by choice, some less so, with increased kind of regulatory and reputational scrutiny and the financial pressures of managing and serving risk. It's likely, you know, I think it'll lead to even further consolidation in the market. Growth areas are salary-related lending and point-of-sale instalment credit. The former competes with the overdraft and the payday-like products, and often provides an income smoothing solution, which is great for some customers. The latter, I think, competes with credit card and catalogue products to spread the cost of something over a shorter period. So there's people moving into those spaces. The landscape for consumers is disrupted by how profoundly COVID has essentially changed your primary source of income, and consequently really your perceived risk profile, either with mainstream and/or alternative lenders. There are combinations of varying and layered circumstances. So people that were stuck in debt pre-COVID, that it's just increased and persisted. People that have incurred debt to navigate lockdown and beyond. Self-employed and gig economy workers with variable and precarious income, unemployed, either during lockdown or now with the end of furlough, as Helen's talked about, entering the welfare system potentially, and people already in the welfare system whose income remained, I would say, fairly stable. It was more their expenses went up, and people in jobs that have not been impacted by COVID with more stable or even increased income. data, including open banking data, play an important part in finding the right solutions for those complex set of circumstances that I've described. And with the increasing ability to do this in a more granular and tailored way, I think is what the technology affords. Now, that's true for many people in the system, but not for all people. So how you transact your financial life will determine how you can participate in some of the benefits of open banking, and how well us as organisations can assimilate the data that they need to deliver that relevant and usable product that fits for you, will be where we can create success for our customers in terms of participating. So yeah, that's my kind of view of the landscape. Thanks.
Great, thanks, Diane. And I was going to turn to Gareth from Nationwide. You know, how are you seeing open banking changing the area of lending? And maybe come back on Diane's points around the different challenges under the pandemic.
I don't know that there's too much to challenge there. I think Dan sees the world right. I think it's the view in mainstream credit as well as alternatives that the pandemic hasn't really caused very many new issues. It's taken the lid off of issues that have been underneath the surface and less visible at the national level, but have always been there. And people who've been working in alternative credit like at MoneyLine, people who've been working in the debt advice sectors and other social justice type movements will have known the injustice between the rich getting richer and the poor getting poorer, the people with lots of choices getting more choices, the people with few choices being left behind. But one of the driving forces behind making sure that open banking for good brought that innovation down to the financially squeezed space, not only in the financially cushioned. In terms of how open banking is affecting this area, if I maybe talk to the mainstream credit bit, which is it should have affected it more, and it's going to need to, I think. So what do I mean? With the regulator being really clear in the last couple of years, particularly with the close down of some of the larger rent to own or high cost short-term credit providers, where the criticism has been you've assessed creditworthiness but you haven't assessed affordability. The regulators become very, very clear that they expect lenders of all types to assess both. Now they haven't specified how, whether you get them to fill in a form or you use open banking, or you can use some algorithms and assessments of what's a reasonable cost of living for somebody in your part of the country, that kind of thing. Your mainstream lenders still rely heavily on the CRA data to lend, which means they rely heavily on assessing creditworthiness over against affordability, and their methods of assessing affordability will be many and varied, but very few of them are using open banking to supplement that. I think that's going to, I think that should have grown by now, and I wonder why it hasn't. I think a lot of it is because the lenders themselves are big enough not to need to use it. Their balance sheet is big enough to absorb the risk. Their market share is big enough to be perfectly profitable without needing to find new people to lend to, which is not the problem that some of the other lenders on this call will have. Where I think it should come in more, though, is with the forbearance that I suppose the bigger lenders have been most impacted by. 1 in 7 residential mortgages were on a payment holiday over the course of the summer. And while it's understandable that the requirement was that that shouldn't impact your credit file any, at the end of the day, that's an awful lot of this population go into 2021 having taken up to half of the year off of making their largest single monthly payment. Consumer credit providers right across the market, including the mainstream, will have a question mark against a credit file that reads perfectly clear, but 1 in 7 took a payment holiday. They'll have a question mark about what did you do with the money, and why would you now need to lend more on this line, borrow more on this line. And so I think it would be right. I think it would be really helpful, and that could be the impetus we need to encourage mainstream lenders to open their eyes to this open data more, so that they can make better informed decisions, satisfy their own questions about, but what did you do during the lockdown, or what actually is your income state? The only way for them to know that for sure will be open banking data. That kind of information can be deduced or worked out roughly from CRA data, but they're going to need to use open banking. So my hope would be that going into 2021, the post-pandemic world is the reason why mainstream lenders adopt this technology more.
Excellent, thanks, Gareth. And Tim, I was wondering, from the position of Salad Money, what are you seeing? What's the state of play? How has it really changed the landscape so far in the lending area?
So we're lending sub £1,000. This is not mainstream credit. This is not mortgages, car finance, large loans. This is for people who typically have either got a bad credit score and are excluded from mainstream access to mainstream credit, or the over-indebted. And we see equal amounts of those individuals applying from the NHS. I mean, I have to say that if you don't use open banking, you will lay yourself open to claims of unaffordable lending. I find it slightly surprising, Gareth, I'm going to pick up on this, that the FCA is not mandating the use of open banking, because in some respects you can't just take and use open banking to validate someone's net income and then supplement that with a credit score. You've got to look at the whole affordability piece. So for us, using open banking only, we do not use credit scoring, has proved to be a real revelation in both terms of our risk and our collectability, but also giving people a chance. I mean, it's really unfair that a blot on someone's credit file 6 years ago is carried forward and used. It's a bit of a it weighs people down. And within the NHS, we see a lot of people who are prone to financial life shocks. And I think it's deeply unfair that those individuals should be excluded from mainstream credit because of a missed payment once or twice, or a payment holiday on something. So for me, I want open banking to be used in its fullest capacity by all lenders, regardless of the size of the loan. I was slightly shocked on a call last week where one of the credit reference agencies said that they didn't think it was appropriate for smaller sub £5,000 loans to use open banking. They thought it was a sort of sledgehammer to crack a nut. I don't believe that's the case. Our users are willing and able to allow us to access open banking with consent to make our lending decisions, and they're very glad of it. So yeah, I see open banking as changing the area in affordable lending quite considerably.
And Sheraz?
Hi. So we, as a business, are clearly not a lender. So from our perspective, there's two core elements to what we do. The first one is we supplement rental data into the aforementioned credit agency. So we verify rent payment data, and we supply that into both Equifax and Experian. That's then built into their, that appears then on the statutory report, and that information is available for lenders. On the B2B side, we also do tenant referencing, and actually at the crux of tenant referencing is affordability. So we will look at income, we look at expenditure, and we'll look at, for example, if the individual tenant can afford the rent that they're looking to pay. Now, actually, that same process can also be applied to other areas. So the point that's already been made is actually the capability in open banking is very powerful. You can use it for clearly decision making. You can use it to gather insight. You can supplement information that's already available. So rather than pick sides and say actually someone isn't doing what they should be doing because they're missing a trick, I guess my view is we're here to supplement information that's readily available, and we're also here to provide information that isn't readily available.
Okay, Farhan, I'm going to bring you in now, and it'd be interesting just to hear sort of from your position looking across the fintech spectrum, sort of what you're seeing.
I mean, and I think the interesting thing is through the open banking challenge that we saw with the open banking implementation entity and with Nesta, they had some research as well. And that really kind of opened my eyes. And I mean, I'm looking at this on a day-to-day basis, but some of their research around kind of affordability from just how much impact it has on society, especially right now as we, are heading into a really uncertain time, with a second potential lockdown period of the winter. The entity and Nesta kind of found that, I think through their research, 55% of people are concerned about their finances and starting to think about that. And I think from a borrowing perspective, also, to be honest, to prevent kind of coming into a needs-based kind of to borrow as well, right? And I think these are the places where open banking really plays a part. So if I think about things from a challenge perspective, two of the winners primarily are helping people on their saving side, so that when kind of an emergency does come up, or when some unexpected expense comes up, people have that kind of savings to be able to dip into rather than needing to borrow. At the same time, kind of alongside Moneybox and Plum, you had Mojo Mortgages, and aside from the sexiness of how they're going, which Helen kind of dipped into earlier, I won't go there. But what they are doing is helping people to think about what they need to do in order to get to a point to be able to get a mortgage, right? How do you get kind of stronger from a financial services perspective and your own kind of financial needs to be able to then afford that home? And then you've got WageStream, which instead of, people going to a payday lender or going into, a lender that's not necessarily going to have the best interests of the individual, what WageStream is trying to do is give people kind of access to their salary and their earned income sooner rather than later. And I think it was interesting, I can't remember, I think it was Gareth who kind of mentioned about mainstream lenders kind of taking on affordability. And for me, kind of now flipping onto the other side as an investor, I'm kind of looking at this as a massive opportunity for startups, right? Because people are, kind of not necessarily having great credit scores, as I think it was Tim kind of mentioned, because something that might have happened 6 years ago. And if you've got companies that can look at affordability for leveraging open banking, and don't get me wrong, there's still a ways to go in order to get the data classification and everything else right. But you can get some really good signals in terms of understanding the customer's ability to afford some kind of lending product. And it's a shame that the Main Street lenders aren't doing that, but it's an opportunity for a lot of companies, including those that won the competition, but also others, to kind of leverage that data and offer these customers that maybe had, some unforeseen experience several years ago. I mean, personally, I'll give you a personal anecdote. When I had my first company, I had maxed out credit cards. I had, kind of gone into some really bad debt in that first company as I was trying to kind of like navigate out of the previous crisis in the real estate market. At the same time now, kind of, am I a good kind of aspect to lend to or a bad aspect to lend to? From a credit scoring perspective, there was a time where it would be difficult, right? But, kind of luckily, I had a safety net, but a lot of people don't have that same kind of safety net. And for some kind of reasons, if you can find a way to kind of show, hey, this person can afford that loan, rather than that kind of intermediate credit scoring, I think it is an opportunity to give people a hand where you can.
I think it's interesting what's come up, which is, to me, I really want to ask, and maybe I'll start with Gareth. I want to ask sort of why do lenders, traditional lenders, still use sort of the old credit scores from before, when we have, there's been an explosion of data, we have big data everywhere. Why isn't that data being used?
Well, what's in it for them, right? Like, they've got the balance sheet, they've got the access to markets, they've got the branch networks, they've got the digital channels. How aggressively do they need to grow the consumer credit, their share of the consumer credit market? Yes, there are underserved segments of society, but a private enterprise doesn't have a legal responsibility to meet unmet needs, do they? They need to manage their own risks. They want to achieve their own commercial goals. So I suppose it does come from a what's in it for them. Now, I think what's in it for them is, just as other participants have added, is, look, you've got some old mistakes, you've got some old life events. Like, it's not always I bought too big a telly, is it? Sometimes it's I got made redundant. Like, you can experience financial difficulty because of things you do and things that are done to you. And so I think for businesses that are reliant upon consumer credit lending, as mainstream lenders are, they're going to need to be more creative in how they assess creditworthiness and affordability in order to keep that market share. So I think until now they've not needed it, but as the marketplace becomes more competitive and as those credit files themselves begin to deteriorate, but the affordability may be there in lumps and bumps in the marketplace. I don't know necessarily that it's the financial inclusion aspect of things that will drag mainstream lenders into more wide use of this technology. I think it may be simply in their own commercial interest to keep pace with where they would have been had there not been a crisis, that hopefully will lead to the adoption of the technology. From my point of view, I don't much mind about what makes them do it, as long as they get on and do it. I would love to see it come from a real commitment to financial inclusion and financial well-being, but a better use of the technology means more people rightly receiving credit and financial services when they need it.
Okay, Tim, I can see that you're waving your hand, trying to get in. What do you want to add to what Gareth has said?
What's in it for them? I mean, that's an amazing statement from a bank, but what's in it for you as a bank is to make sure that you're lending affordably to your consumer base. I've got to tell you that within what we see in open banking is the constant indebtedness of people in overdraft. And, you know, we talked about persistency, and the FCA moved on persistency with credit cards and people, you know, paying down the capital. But, you know, we see people in a persistent overdraft year after year. Now that information has come to light, and I'm deeply concerned that the banks don't seem to be bothering about persistent overdrafts. We're talking about people paying £3-4 a day to manage an overdraft over a prolonged period of time. So what's in it for you, Mr. Banker, is that you are fulfilling your obligation to civil society by ensuring that you are affordably dealing with your customers. And it's not what's in it for you, because ultimately I think this is a responsibility that is you're going to have to adopt open banking across all levels of lending and credit and extension of overdrafts. So, you know, roll on the day when the FCA force all lenders to use open banking. And I have to say that credit scores, again, they're holding people back. Everyone's been sold this idea about being a good credit citizen, but it doesn't really work when you've got open banking that's available to you, and it's your data that you can share with whoever is able to consume that data. So that's my view on why open banking should be used more widely.
And Sheraz, do you have any, you know, what's your take on this?
Look, I've been in lots of panels where people have turned around and said that the credit scoring system is out of date and not fit for purpose. And my view in it is that it has a role. It has a role because it captures historic behaviour. But I've already said, I can see Tim shaking his head, I've already said on this panel that there is additional information through open banking that should be used to supplement what already exists, because there is a balance between affordability. If you're assessing risk, like I said, I'm not a lender, but if you're assessing risk, there is a balance between affordability and previous behaviour, and that will be part of the decision-making process that someone will look at and say, right, if I'm going to lend to you at a reasonable rate, you know, given where interest rates are, you know, is that 6%, 8%, 10%? If I'm going to lend to you at a reasonable rate, there is a whole host of information available. So yes, open banking and affordability plays a role. And I've already said that as a business, we do affordability from a rental reference perspective. You know, we do affordability checks when someone is looking to rent out a property to understand whether or not they can afford to rent the property out. And on the flip side, we collect and verify rental payments to show prospective lenders that actually this person has exhibited good payment history, use that and take that into account in a decision-making process, because historically the credit scoring system has ignored rental payments. And when you have 35% of the UK living in rented accommodation, if they've shown good behaviour when they're paying their rent, our view has always been that should be factored into any lending decision.
But it's available in open banking, right?
correct. And what I've already said is that we have supplied that information, because at the end of the day, if you look at a line that says rent, there are a number of questions. Okay, was it paid on time? Was it the right amount? Because actually looking at it in isolation is not going to answer those questions for you. So we collect a whole, we collect a raft of information that we then say, right, this is a benchmark, this is a start point, and actually how has someone paid their rent against what they should be paying? Because if you see 3 rental payments, like I said, it doesn't mean it was paid on time, and it doesn't mean it was a full amount. So when you're assessing whether someone's shown good behavior, they are some of the factors you need to take into account. But as I've already said, the open banking side of it and using the data that's available should be used. We use it already, right? Other people should use it. We can make it available if someone doesn't have the skill set or you know, the resource to do it. We can make that available. You're using that, Tim, yourself in terms of your own business. That can and should supplement what's already available.
Okay, I wanted to bring in Diane because I just wanted to ask her if she thinks that the categorization of different transactions which make up someone's credit score, you know, does that need to change? What is your opinion on that?
In relation to using open banking data, particularly for the customers we see, I think that there is some work to do, especially when we've kind of looked at the use case in the last 6 months. You know, there are so many great ways that this can be used, but all of them rely on having what I would call good and relevant data. We find that many of our low-income customers we see are not using their bank account as conventionally as a mainstream consumer might do. The way they choose to manage their money and pay for things leads to some difficulty in accurately categorizing the transactions. We use the 12 months of open banking data to help get that wider view. And we're looking at that. I spoke earlier about the state where a customer is at the point of wishing to borrow and looking at that, what state are they in there? And then the trait, what are their usual financial characteristics and behaviors over a period of time? And what we're really looking for there is, are they in distress, or are they looking genuinely to cover and spread the cost of something over a period, and then taking a view on the how we should underwrite for that. Trying to build an income and an expenditure statement, so an I&E, from data has presented really 3 main barriers for us with categorization of the transactions that are shared by the banks. Our open banking partners, they tell us that vendor ID, transaction code, and vendor address specifically are 3 things that are not included in the data set at the moment. So the categorization is made using the transaction description, which can be variable between banks and or can lack information. So it's creating a gap really between what is being achieved and what could be achieved in terms of being able to categorize expenditure for people who don't necessarily pay everything by direct debit or using paying their bills in a conventional way. So 3 main barriers, income related. If somebody's working part-time and they might be working part-time on a couple of jobs, small and variable income, for instance, for part working, being categorized incorrectly because of there's often value thresholds placed on this transaction type, and it can mean that income can be missed in the underwriting assessment process if you're doing it all in an automated way. Secondly, cost related. Many costs and regular expenses are not categorized because of how consumers pay for them, as I've said. So if you go and top up your utilities at a post office or your local corner shop and use your PayPoint card, it's not going to show as specifically as I'm paying my gas bill or I'm paying my electricity bill. And we find several of those kind of fixed costs are hidden like this. And well over about 50% of our customers' household spend is still conducted in what I would call non-bank transactions in a significant number of the cases that we see. Finally, and probably the most challenging to solve, is transfers related. So a number of our customers use one account to receive their main source of income and then make transfers between another of other accounts. So they might be jam jarring money for bills, or to contribute to bills that are paid by somebody else in the household. And without finding a way to almost subcategorize those transactions, it can make it difficult to, again, construct an accurate view of both the income and expenses. So lots of open banking providers tell us we have a lending dashboard for the I&E for you. But when you actually drill down on some of the key parts that I've highlighted there, they don't work for customer segments at the moment, mainly linked to that variability on the categorization on the transaction description rather than the vendor ID and transaction code. So even with some very clever algorithms, and there are some clever algorithms out there, the structure underpinning the data actually needs to be extended to sharing those three other bits of information. In addition to the, almost what is the current scope and legal requirements for banks to share. So I think doing this create an opportunity. We're talking about financial inclusion today. It will create absolutely a greater opportunity for inclusion and being able to get, Tim's advocating for, using this. It's compulsory. It's got to be structured in the right way so that we don't leave people behind again with another kind of financial assessment system that's introduced. So yeah, that's the issue with categorization for us, and it's a really important part for us to be able to use open banking effectively.
Sorry, Gareth, did you want to come in at that point?
Just want to amplify what Diane's sharing there. The use case for that greater level of detail, both in terms of what the banks are required to share, but also in terms of how it's interrogated by the third-party providers or the end users of the data. Building a budget that the user understands, recognizes, and believes in is pretty important too. I don't think you should just run your own algorithm and end up with a yes, no, will I lend, won't I lend. I think being able to produce them does this look like you? If you pin this on your fridge, would you be able to live by this budget? Do they recognize it? I think involving the consumer is incredibly powerful, but also the use cases. If the opportunity to lend in an affordable way to a sector of society that really needs it is the business case to get this data and categorization, as Diane calls for. There are use cases into less profitable but just as important financial inclusion worlds, like in terms of debt advice. In the debt advice world, the standard financial statement that's not a lending decisioning tool requires a deeper level of categorization than affordability simply does in terms of lending. But of course, the same problems that Diane and Tim will see, the minute you take that money out the cash point machine, was that on food or fags? And does it matter to you as a lender? Because it matters to you as a debt advisor. The minute you bought something from Tesco's, was that food or fags? Because it matters to you as a debt advisor. And so that level of data will help in those use cases that are less easy to work out a business case for and justify investment. If the business case that Diane's making, I can lend to more people more accurately, more effectively if this data opens up to me. My hope would be that use case drags across all areas of financial inclusion to benefit more people than simply those who can be lent to.
Well, we've had a comment and a question which sort of comes into this area as well, which from one person, isn't the best answer to scoring is that as many data sources as possible are used to get the best picture and the fullest assessment of the person and business. Yes, but how difficult is that, Farhan?
Yeah, so I've got a lot of thoughts on this. I mean, one of the things that I would share is that I don't think one kind of data set or one data point is enough. Having a blend and trying to look at many, especially right now, with, as kind of Diane and Gareth have said, like, we don't know if it's foods or fags yet on that sense. But at the same time, we do have companies like Flux that are looking at receipt level data, right, and giving you a digital receipt. And then, so if you take that alongside open banking, and then you've got the credit score as well, all of a sudden you've got a much richer data set in order to be doing something. And I think the interesting thing, on the previous conversation around the high street banks or the lenders and what's in it for them, I mean, I think the thing that's important to realize is that, right now, the view is not around kind of stakeholder and society, it's still around shareholder, right? And alongside the shareholder consent and the shareholder optimization, you've also got loan to deposit ratios, right? And if I can make more money as a high street big name lender selling a mortgage or whatever it is, rather than giving somebody, you know, kind of a means to be able to get through to their next payday or whatever it is, right? You're going to take the more profitable loan right now, right? But that creates an opportunity. The other thing to realize is that, you know, their cost base is a lot higher. You know, fundamentally, they're going through a digital transformation for a lot of these mainstream lenders themselves, but they still have a lot of bricks and mortar. They still have a lot of staff. They still have a lot of overhead that they need to account for and be able to turn a profit on top of that, which is why there's a huge opportunity both for startups or for some of these new lenders or for people who've got a balance sheet that can lend off that balance sheet in order to provide, you know, some of these gaps, filling those gaps with kind of alternative means to service a category and service a consumer base that's looking for means like this.
And Tim?
I'd just say, I mean, we are talking about people who typically, we're talking about financial inclusion. This isn't about getting people mortgages or better savings products. These are people, certainly Diane and myself will be dealing with people who are not in the habit of saving. They haven't got an ISA that they're going to top up just before the deadline. Yeah, this isn't about how open banking is going to discern them from someone else to get a speedy mortgage. This is about people who live on the edges of society. They are underserved quite substantially, in my view, or they're massively over indebted. And for me, I think you know, I get that using a credit score is, you know, or all the sources of data that are available to you, whether that be county court judgments or bankruptcies, IVAs, etc. That's great. I was actually at Experian at a point in time when having a payday loan and repaying it created a black mark on a person's consumer file. Yeah, this wasn't the fact that they hadn't repaid it. This was the fact that they had taken out a payday loan and repaid it in full, but that mark stayed with them for 6 years. And that mark was interpreted by all of the major lenders. So for me, I think it's slightly anachronistic that, you know, those sorts of things for the people who are at the main, you know, not in mainstream credit, exclude them from accessing credit, utilities, insurance products, mobile phone contracts. You know, we hear lots of stories of people with poor credit scores not being able to pay by direct debit for their utility bills because guess what? They've got a poor credit score, and that's just not fair. So I'm sorry, credit scores need to change really considerably before I, for one, will use them. And in fact, you know, we don't offer loans to everyone because they can't afford to make repayments, and it would be irresponsible of us. We don't report their search to a credit bureau because guess what? Searches are used in the makeup of an individual's credit score. So if you're credit hungry and you're desperately looking for some money to get through to the next month, that search will count negatively against you, which is why I, for one, will not submit data to credit bureaus.
Diane.
Just a really quick point on, you know, the almost what I would call the layering of using different sources of data. Of course, we want to get as much data as we can that helps us make a responsible decision and assess the affordability. But if we can get the structure of the data right in the first place, because on a practical level, just, you know, another organization coming in to say, well, I can subcategorize those receipts for you, I can do that, adds another level of cost of delivery that then needs to be kind of in some way passed on to the customer. So if we can get the structure of the data right in the first place, keep adding layers almost of organizations that are going to charge you for the analysis will actually, from a financial inclusion point of view, potentially increase the cost to the customer because somebody's got to pay that bill.
And Farhan?
Yeah, I think it's a really important point that I just wanted to extend a little bit, because I think, like, the thing is, if you're trying to kind of lend to people who are, let's say, vulnerable, right, today, right, then you need to kind of have a lot of infrastructure. It is really complex to get kind of multiple data sources. But in the same way, I believe that you had Moore's law from a chip perspective in order to get computational power to accelerate. I do think we're getting exponential in terms of, you know, how quickly we're able to assess data. So I'm hopeful, you know, hopefully my children don't ever need this, right, type of services in terms of being, you know, in that kind of vulnerable category. But at the same time, when they do get in their, you know, kind of early 20s, if there is another situation like the one that we're in right now, and people do need kind of other lenders and stuff like that, you know, my hope is that within the next 5 years or so, we'll be a lot better in terms of how we categorize. Now that creates a window of opportunity right now for people to invest, for people to understand, for people to build the right kind of understanding of that complexity in order to serve both the customers and the lenders on that front. But I do believe in 5 years' time, you know, companies like TrueLayer and others that are working on the infrastructure side will get better and better in order to enable lots of startups, lots of lenders, lots of intermediaries, and eventually the mainstream lenders as well, in order to kind of make it more profitable to be able to lend to this category as well.
Sheraz, I was going to bring you in here because obviously you supply data to some of the big credit scoring companies. What's your opinion on this? Do you think this is the way forward? Do you think open banking is going to change how that data is distributed and collected and processed? Really?
Yeah, the short answer to that is yes. There's points been raised in terms of what constitutes a good or a bad score, and I think what constitutes a good or a bad score 3 years ago, 2 years ago, a year ago, all needs to kind of be updated continually. No, I'm saying, Tim, how the reference agencies, what they factor in, not how far they go back. So, how they evaluate what is a good or a bad score over a period of time needs to change over time. You can't have a view 10 years ago and not evolve, because the world has evolved. So for me to have a role to play, for sure, but it needs to evolve, because actually anyone who stands still goes backwards anyway, right? So we know all that. Diane made a really interesting point, and it's come up in terms of categorization. So internal transfers, creating pots, if you're doing open banking analysis, they are a bloody nightmare, right? I want to know who the money's been paid to, rather than know what the description is, right? Because having a description doesn't help me, because I can write any bloody description on there. What I'm interested in is who has that payment gone to. And so therefore, even though, we use open banking, lots and lots of businesses use open banking, it isn't a magic, let's stick it in the computer and get a result. You have manual intervention, right? Because a lot of the stuff that comes out, we were doing some work today around categorization, and there was an individual that had four different income streams, right? This isn't, when I started work, I got paid every month, and it was pretty much the same amount of money, and had my one employer's name on there. So you could look at my bank statement and it'd be very bloody obvious what I earned. Now, actually, yes, we have the technology, but the inputs into that technology, the inputs into the kind of bank account are not easily understood unless you fit a very, very specific scenario. So I think going back to the question and to the points that have been made is everything needs to evolve, and the information now that's available to us allows us to make decisions in theory much quicker. But I think the challenge is it's not an automated process. You will always have multiple edge cases, especially today. So actually not even edge cases. They are like 20, 30, 40% of the people you've got the data, but actually it's not necessarily giving you the answers. So the conversation needs to be two-way, and therefore will take more time, and it doesn't have the immediacy that some people necessarily want. So yes, we supply to the reference agencies what we think is a key data point that we look to verify, and we will absolutely continue to do that. We will also supply that information and our analysis of income and expenditure to any other business that values it. So from our perspective, we want to both supplement and improve the decision-making process.
All right, I'm afraid we're coming to the end of the webinar, which is a real shame because it's been so interesting. And we didn't touch on something that I was quite keen to touch on, which is around whether people are still nervous about sort of security in open banking. But I'm just going to ask one last question to each of the panelists, and just to see where you stand. It's sort of like a 30-second answer. So is open banking revolutionizing the lending landscape, especially around sort of more the financial inclusion element to it? Sheraz, I'll start with you first.
It can, and I think it will, but it's not a it's not a quick solution. And I'll make the point that I made earlier, so I will sound like a broken record, which is that it's not a magical answer, but it should be used to supplement information that's already available.
And Diane?
I'm going to sound like a broken record as well, but please get the structure of the data right, and I think it absolutely can be. But I think as well, linking it with things like emerging payment technology as well, so request to pay and being able to do push payments will help with not only the kind of underwriting process, but actually managing the ongoing life cycle of lending and payment technology. So I think making sure that we can link up with things like request to pay and new technology that's coming out is really going to revolutionize things, I think.
And Tim?
So my answer is it is changing the face of affordable lending in the UK. We've taken a brave step in some respects. We've democratized our data. We've given that to the University of Edinburgh. We are going to produce a report on what we see within the data and what the data has done in terms of our credit, risk decisioning, lending, but also reporting on all of the credit malpractice, which we believe is there. And I think I've touched on some of it today. So we want our open banking data elements to be used for greater research within the UK to assist people at the affordable lending level.
And Farhan?
I mean, I'd say it already is. I mean, I think it's, kind of at that cusp of tipping over into really influencing it and really disrupting it. But when I look at kind of the competition from an open up challenge perspective, I think all of these companies would have taken several years later, right, to implement and have kind of that kind of impact, whether it is from an affordability to a salary, to a savings, to a mortgage, right? If you think about all of those, right, all of those kind of groups, whether it's people right at the edge or people who are trying to kind of stay on that treadmill and move up different kind of spectrums, I think they're all benefiting, from these kind of companies and from these innovations that open banking is allowing, kind of for customers and for startups and for, some of the larger companies to really kind of take advantage of. And I think it's off the back of a lot of infrastructure that's already happened when I think of companies like TrueLayer. And I think it is from companies at the edge that are trying to be even more innovative, like Wallet or Flux or WageStream or Mojo or any of these companies that are really helping to kind of plug some gaps here.
Excellent. And Gareth, you have the last word.
So the revolution started, I suppose. I mean, people like Tim have been able to come to the market and many others. It absolutely isn't over. There are many more possibilities still to be explored, but also some problems potentially. If we categorize the data to a certain level of detail, it gives you the opportunity to discriminate like crazy and not lend to people who go to the pub 5 times a month if you determine that's a risk. What types of behavior will you as a lender determine to be in appetite and outside of appetite? The same mistakes that maybe the mainstream lenders might be accused to have made by relying overly on CRA data may now be replicated by relying on what you think you see in the current account transaction data. So be careful, your prejudices might come out. But also,
wait until we see the report from Edinburgh, Gareth, because I think that's not true.
Mate, I'm a believer.
You're extolling the myth of credit scores.
Okay.
Mate, I'm a believer, and you're eating into my time. So watch out for the problems. And with the rush to market, it's great that there's an acceleration, new people coming to the market. My hope would also be that those companies are robust enough to work in the increasingly regulated environment, particularly with the follow-up support that some vulnerable customers need when lending goes wrong.
Excellent. Well, thank you so much to my panelists, to Gareth, Farhan, Tim, Diane, and Sheraz. Thank you so much again, and I'm going to hand back to Helen.
Joy, wow, how do I follow that? Thank you, thank you. I asked the panelists to be provocative and punchy, and they certainly nailed that brief. This is a topic that is very close to our hearts at OBE. And when I've been listening to, or rather reading the feedback I've been getting on WhatsApp, we will certainly invite you back. Thank you very much. What I would like to do is just pick up on one of Farhan's points where he said there's, as an investor, I'd like everybody to listen to this. He said there was a lot of opportunity for people to create product. And obviously we're here today to announce and to celebrate the Nesta Challenge winners. But I would also like to draw your attention, which you can see at the top of your screens, to our Open Finance Apathon. And one final plug, please do have a look at that Open Finance for Good category. And if you have been inspired by the panel and the debate, and boy, it has been an exciting debate, please do submit your product. We would love to help you get that to market. So all that remains for me to do is to say a big thank you to Joy, an amazing host, thank you, Joy, and to our panel, and to say that, and what am I going to be doing? Well, I'm going to be re-listening to this, and when we share it online, and when our friends in Asia Pac wake up, they will be listening to this in the morning. View on demand figures have a real spike the next day. I certainly am going to be listening to this again when I'm on my turbo trainer in the morning. So all that remains is to say, I hope you're all healthy, stay safe, stay well, and please take care of your families. And I will see you soon. Bye for now.